Respected Wall Street analyst Tom Lee of Fundstrat Global recently went on CNBC to remind investors that the recent market sell-off was an overreaction and that he's still bullish on the market, eyeing some of the major companies that have been oversold in the recent market correction. Do you know there's a once-in-a-decade opportunity brewing in the tech sector right now? We're talking about massive companies with proven track records trading at discounts that make them absolute steals. I'm talking about buying the dip on industry titans, the kind of companies that could supercharge your portfolio for years to come. In this video, we're diving deep into 3 tech stocks that you absolutely cannot afford to ignore. We'll be looking at a leader in innovation that's revolutionizing the way we experience computing, a pioneer in technology connecting the world through seamless data transfer, and a giant in e-commerce reshaping the landscape of online shopping and cloud services. If you only watch one video today, make sure you watch this one, all the way till the end. We're talking about potential life-changing returns here, so hit the like button, let's get 1,000 likes on this one, share the video and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Let's hear what Tom Lee has to say.
Great to have you back. Welcome.
Yeah, great to see you.
Why do you say overreaction?
Well, yesterday really was an indiscriminate selling day. Did Tesla's valuation and fundamentals drop 15%? Did the broad market have a 4% decline in valuations? To us, it really looked like a lot of liquidation. I think investors are, of course, reacting to the White House warning of pain ahead, but it has been more of an equity sell-off than it has been in corporate bonds. So to us, 4% down days, yeah, I think it's an overreaction.
Yeah, how do you best explain that difference between what equities have done and what we've seen in IG and even high yield?
Well, I think on the stock side, markets are now saying, look, the new regime is we have to take the tariffs seriously. Now we don't know how long these tariffs might be. Will it hurt growth? And we've seen cuts from economists. But the bond market is saying, well, you know what? This is a growth scare. But the Fed is also now in a position to begin cutting because inflation pressures are abating. So I think the bond market is sort of pricing in a Fed put. The stock market saying, I'm not sure if there's a White House put, and then the Fed's on hold, and I think that's the divergence.
So which one should we be listening to?
Well, I think the Fed put, in fact, is probably coming back because the odds of a May cut have been inching up. They hit 54% yesterday, and in fact, total cuts hit 3.5 cuts, which is now 2.5 or 1.5 more than the Fed's guided. But I think that the Trump put exist. I mean, I know they've explicitly said there isn't one, but look at yesterday. Tesla's down 15%, and on Truth Social, Donald Trump talks about Tesla. So I think a put exists. We just don't know the level when the White House intervenes, and then today's the Business Roundtable. We'll find out.
He does, but then he kind of ratchets up the dialogue as it pertains to the trade war this morning on Truth Social, regardless of all of the headlines surrounding tariffs and the trade war and what it means for growth and what it means for the market reaction.
That's right. And for a while, markets ignored those tariff headlines, and now they're taking it very seriously. But I think at the end of the day, if we take every headline at face value, then markets are completely paralyzed. And of course, that again creates opportunity because at some level, all these stocks are really attractive opportunities, especially something that's had a 50% drawdown.
I mean, you can talk about the NASDAQ being an overreaction at a 4% down day, but Tesla was up $500 billion in 2 months at the end of last year. I mean, was that an overreaction to the upside? This is what we're trying to figure out, right?
Yeah.
Where do we start out with in terms of valuation and investor expectations coming into this period when it's become a little bit more noisy?
Yeah, well, there used to be this term a while ago called rage selling, and I think these days with instant liquidity, markets have rage selling, and I think it's not just individual. I think institutions push a button and go flat. So I think that, we're getting whipsawed these days. And I don't know where to titrate that. Like, was Tesla worth double what it was compared to November, and now is it worth half? I'm not sure, but I think it's somewhere in between.
Meantime, there's still a lot of desk notes about CTA supply and the next 5 days. There's plenty to sell. Are you buyer that even if we bounce today, it's going to be more of a process?
Well, I think positioning does tell us we're stretched to the downside, and we know markets are oversold, and we know sentiment's bad. I guess the real tell is we need to have follow through because last week felt like we could be bottoming, and we failed Monday. But do I think that a 10% correction shouldn't happen. I mean, this is like the sixth correction of 8% or more since 2022, so it is pretty garden variety. But getting down more than 10% to me is like we've got proof of a recession, and I think that's why the data points next few weeks are going to matter.
Yeah. So if we do draw down 10, you'll want to talk again.
Yes.
Okay.
Now, before we dive in deeper into today's list, I want to let you in on a little secret that could completely transform how you invest and grow your wealth. This video is sponsored by Forecaster Terminal, a tool I've been using to uncover these incredible stocks, and honestly, it's been a game changer for my research. This software, powered by the Forecaster AI agent, uses cutting-edge artificial intelligence to analyze all financial instruments, whether it's stocks, ETFs, cryptos, indexes, forex, and even commodities. It's like having your own expert financial analyst working around the clock to give you the most accurate insights and uncover new opportunities. With Forecaster, I can quickly identify value stocks, growth stocks that are ready to break out, and even spot seasonal trends in the market that most investors overlook. I can spot insider transactions in seconds. The political tool tells you when politicians are buying or selling shares in a company. If you're serious about investing, this is the tool that can completely transform your portfolio. It's designed to help you find opportunities, reduce risks, and make smarter decisions that could grow your wealth faster than you thought possible. So, if you're ready to take your investing game to the next level, click the link in the description now to try Forecaster Terminal for free, and use my code Galore10 to get a 10% discount when you sign up. Don't miss out on this game changer for your portfolio. Alright, let's kick things off with a company that's been absolutely crushing it in the semiconductor space. Advanced Micro Devices, or AMD as we all know it. This company has been a cornerstone in the tech industry, consistently pushing the boundaries of what's possible with silicon and circuitry. Now you might be thinking, semiconductors? That sounds boring. But hold on, because the story of AMD is anything but dull. It's a tale of innovation, competition, and relentless pursuit of excellence. But trust me, this is anything but boring. Imagine a world where your favorite tech gadgets are faster, smarter, and more efficient. That's the world AMD is helping to create. AMD is at the forefront of a technological revolution, designing and producing the brains behind everything from the latest gaming consoles that have taken the world by storm. Whether you're a casual gamer or a hardcore enthusiast, chances are you've experienced the power of AMD's technology. To the powerful servers powering massive data centers. These servers are the backbone of the internet, handling everything from your social media feeds to complex scientific computations. We're talking about the Ryzen CPUs and Radeon GPUs that are literally powering the future. These chips are not just components, they're the heart and soul of modern computing, driving innovation in every sector imaginable. Now, AMD hasn't always been the market darling it is today. The company has faced numerous challenges over the years, from financial struggles to fierce competition, but through it all, AMD has shown remarkable resilience and an unwavering commitment to innovation. They've had their fair share of ups and downs, battling it out with Intel in a constant game of technological leapfrog. This rivalry has spurred both companies to push the envelope, resulting in better products for consumers. But in recent years, AMD has been absolutely killing it, consistently innovating and releasing products that outperform the competition. Their product launches have become highly anticipated events, drawing attention from tech enthusiasts and industry experts alike. Their Zen architecture for CPUs has been a game changer, offering incredible performance at competitive prices. This architecture has set new standards in the industry, making high-performance computing accessible to a broader audience. And let's not forget about their Radeon graphics cards, which have been giving NVIDIA a run for its money, especially in the mid-range market where they offer incredible value. These GPUs are not just for gaming, they're also used in professional workstations, creative applications, and more. But here's the thing, despite their incredible performance and future potential, AMD's stock has taken a bit of a dip recently. This dip has caught the attention of savvy investors who see it as a buying opportunity. Why? Well, the entire tech sector has been down, and some investors are worried about a potential slowdown in PC sales. However, this concern is largely short-term and doesn't reflect the long-term potential of the company. But here's the opportunity. This dip is a gift. For those who understand the long-term vision and potential of AMD, this is a chance to invest in a company that's poised for significant growth. AMD's long-term prospects are incredibly strong. The company is well positioned to capitalize on emerging trends in technology, from artificial intelligence to cloud computing. The demand for their products is only going to increase as more and more devices require powerful computing. From smartphones to smart homes, AMD's technology is becoming an integral part of our daily lives. We're talking about everything from artificial intelligence to self-driving cars, all powered by the chips AMD designs. These are not just futuristic concepts, they're becoming a reality, and AMD is at the forefront of this transformation. AMD holds a market cap of $156.67 billion and an EPS of $1.02. However, its PE ratio of 94.86 suggests a higher valuation relative to earnings. In 2024, AMD posted $25.79 billion in revenue with a net income of $1.64 billion. The stock currently trades at $96.76, nearly 96% below its intrinsic fair value of $189.32. Recent developments bolster AMD's growth narrative. The company introduced its 5th-gen EPYC embedded processors, positioning itself as a leader in high-performance computing for networking and industrial edge markets. A collaboration with QNX to improve robotic system efficiency further showcases its commitment to innovation. 𝗗𝗓𝗏 Wood's ARK Invest has been recently adding to its AMD holdings, signaling institutional confidence in the stock's potential. Financially, AMD maintains a low debt-to-equity ratio of just 0.01, highlighting disciplined capital management. While profit margins and return on equity remain modest compared to industry peers, AMD's high Altman Z-score, strong Piotrowski F-score, and robust global footprint suggest financial resilience. Its competitive advantage, also rated 8 out of 10, stems from strong brand recognition and cost efficiencies. So what does this mean for you? It means that investing in AMD now could be a smart move, especially if you believe in the future of technology and the role AMD will play in it. It means that now is the perfect time to buy the dip on AMD. With their strong product lineup and strategic vision, the company is well positioned for a bright future. This is a company with a proven track record of innovation, a strong leadership team, and a massive market opportunity ahead of them. Their leadership has shown time and again that they can navigate challenges and come out stronger. Don't miss out on this chance to get in on the ground floor of something truly special. Investing in AMD is not just about buying a stock. It's about being part of a technological revolution that will shape the future. Now let's move on to a company that's a little bit more under the radar, but equally as important. Broadcom, ticker symbol AVGO. This tech giant may not be a household name like some of its competitors, but its impact on the technology landscape is profound and far-reaching. You might not see their name plastered all over the headlines, and you might not hear about them in your daily tech news updates, but trust me, Broadcom is a silent giant, a company that has been quietly making waves in the tech industry for years. They are quietly powering many of the technologies we use every single day. From the chips in our smartphones to the infrastructure that supports our internet connections, Broadcom's technology is everywhere. We're talking about a company that's a leader in both semiconductors and infrastructure software solutions. Their expertise in these areas has made them a critical player in the tech ecosystem. They design and manufacture a wide range of chips that are essential for everything from smartphones and laptops to data centers and networking equipment. These chips are the building blocks of modern technology, enabling the devices and services we rely on every day. Think about it. Every time you connect to Wi-Fi, stream a video, or store data in the cloud, there's a good chance Broadcom technology is involved. Their innovations make it possible for us to enjoy seamless connectivity and high-speed data transfer. They're the unsung heroes of the connected world, working behind the scenes to make sure everything runs smoothly. Without Broadcom, many of the conveniences we take for granted would simply not be possible. One of Broadcom's key strengths is their focus on enterprise customers. They understand the unique needs of businesses and have tailored their solutions to meet those needs. They provide a wide range of solutions for businesses of all sizes, from small businesses to Fortune 500 companies. This versatility allows them to serve a diverse customer base and adapt to the changing demands of the market. This focus on the enterprise market gives them a level of stability and predictability that's hard to find in the often volatile tech sector. Their strong relationships with enterprise customers provide a steady stream of revenue and help insulate them from market fluctuations. But Broadcom isn't just about hardware. They have recognized the importance of software in today's tech landscape and have made significant investments in this area. They've also been strategically expanding their software portfolio, acquiring companies like CA Technologies and Symantec's enterprise security business. These acquisitions have allowed them to offer a more comprehensive suite of solutions to their customers. These acquisitions have transformed Broadcom into a true technology powerhouse, offering a comprehensive suite of solutions for both hardware and software needs. This dual focus on hardware and software gives them a competitive edge and positions them for long-term success. With a market cap of $893.79 billion, Broadcom is a heavyweight in both the semiconductor and infrastructure software industries. It reported a significant jump in AI revenue, up 77% year-over-year in Q1 FY 2025, driving bullish sentiment around the stock. Currently priced at $190.09, Broadcom trades 44% below its estimated fair value of $275.27, presenting a potentially attractive entry point for investors. The company's diversified portfolio spanning AI chips and enterprise software has analysts projecting a future valuation of $1 trillion. Recent renewals of key contracts, such as its agreement with Telefónica Germany, further underscore strong demand for its services. Broadcom boasts a healthy profit margin of 19.23% and an ROE of 8.71%. With a balanced debt-to-equity ratio of 0.98, the company maintains a stable financial structure while strategically leveraging capital for growth. Its competitive advantage is rated 8 out of 10, putting it on par with industry giants like NVIDIA, Intel, and Qualcomm. Broadcom stock has also been caught in the recent tech sell-off, presenting a fantastic buying opportunity for savvy investors. The current market conditions have created a unique opportunity to invest in a company with strong fundamentals at a discounted price. Their strong fundamentals, diverse product portfolio, and focus on profitable growth make them a compelling investment for those looking for long-term value. Broadcom's commitment to innovation and excellence ensures that they will continue to be a key player in the tech industry for years to come. Alright, let's talk about the elephant in the room, the 800-pound gorilla of the tech world, Amazon, ticker symbol AMZN. This is a company that has become synonymous with innovation, efficiency, and customer centricity. It's hard to imagine a world without Amazon, given how deeply it has embedded itself into our daily lives. This is a company that needs no introduction. Whether you're shopping for the latest gadgets, streaming your favorite shows, or even running a business, Amazon has a hand in it. Its influence is vast and far-reaching, touching almost every aspect of modern life. From its humble beginnings as an online bookstore, Amazon has grown into a global behemoth, revolutionizing the way we shop, consume entertainment, and even manage our data. The journey from selling books to becoming a trillion-dollar company is nothing short of extraordinary. We're talking about the undisputed king of e-commerce with a market share that dwarfs its competitors. Amazon's logistics network is a marvel of modern engineering, capable of delivering millions of packages each day with remarkable speed and efficiency. But Amazon is much more than just an online retailer. It's a tech giant that has diversified into numerous sectors, each of which it has managed to disrupt and dominate. The company's relentless pursuit of innovation has led to groundbreaking advancements in various fields. They've successfully expanded into countless other industries, from grocery delivery with Amazon Fresh, which aims to make grocery shopping as convenient as clicking a button, to physical retail stores that blend the digital and physical shopping experiences seamlessly, to streaming entertainment with Amazon Prime Video. This service has not only changed the way we watch TV and movies but has also become a major player in content creation, producing award-winning shows and films that rival those of traditional studios. And let's not forget about Amazon Web Services, or AWS, the company's cloud computing arm. AWS has revolutionized the IT industry by providing scalable, reliable, and cost-effective cloud solutions that power everything from small startups to large enterprises. AWS is the undisputed leader in the cloud infrastructure market, powering countless websites, applications, and services that we use every single day. Its dominance in this space is a testament to Amazon's ability to innovate and lead in new markets. Amazon's relentless focus on innovation and customer obsession is what sets them apart. The company is always looking for new ways to improve the customer experience, whether through faster delivery times, more personalized recommendations, or entirely new services. They're constantly pushing the boundaries of what's possible, whether it's developing new delivery methods like drone delivery, which promises to make same-day delivery a reality for even more customers, or exploring futuristic concepts like cashierless stores, or creating innovative products like the Amazon Echo smart speaker. This device has not only popularized the use of voice assistants in the home but has also become a central hub for smart home technology, integrating with countless other devices and services. Now, some investors might shy away from Amazon because of its seemingly high valuation. The stock price can be intimidating, but it's important to look beyond the numbers and understand the value that Amazon brings to the table. But here's the thing. Amazon has consistently proven its doubters wrong. The company has a track record of exceeding expectations, delivering strong financial performance, and continually finding new avenues for growth. They've delivered incredible growth year after year, and their long-term prospects remain incredibly bright. With a strong foundation and multiple growth engines, Amazon is well-positioned to continue its upward trajectory. The global e-commerce market is still in its early stages of growth, and Amazon is perfectly positioned to capitalize on this trend. As more people around the world gain access to the internet and online shopping becomes more prevalent, Amazon's market opportunity will only expand. And with AWS continuing to dominate the cloud computing market, Amazon has multiple engines of growth driving its future success. The cloud market is expected to grow significantly in the coming years, and AWS is well positioned to capture a large share of this growth. Amazon continues to cement its dominance across e-commerce and cloud computing. With a market cap surpassing $2 trillion, the company generated $637.96 billion in revenue in 2024, translating into a net income of $59.25 billion. Earnings per share stand at $5.65, and the stock's P/E ratio is currently 34.79. Growth opportunities remain robust, with automation, cloud expansion, and digital advertising set to drive higher margins. Analysts view Amazon's recent stock dip as a prime buying opportunity, backed by strong fundamentals, including a 10% YoY sales increase, 60% EBIT growth, and an 86% surge in EPS. The company holds over 30% market share in the electronics sector, benefiting from rising discretionary spending. However, challenges exist. Amazon Music faces a lawsuit over unpaid royalties and alleged shadow banning, while recent management changes within its AI division raise concerns over leadership stability. Financially, Amazon reports a competitive profit margin of 10.76%, a strong ROE of 20.72%, and a moderate debt-to-equity ratio of 0.47, reflecting a well-balanced financial structure. While some valuation models suggest the stock might be slightly overvalued, its strong reinvestment strategy, high 𝗗𝗟𝗦𝗖𝗢𝗗𝗘 and Piotrowski scores, and solid revenue streams reinforce its position as a long-term powerhouse. So, if you're looking for a blue-chip tech stock with massive long-term potential, Amazon is a no-brainer. The company's ability to innovate, execute, and expand into new markets makes it a compelling investment opportunity. Yes, the price tag might seem high, but remember, you get what you pay for. Investing in Amazon means buying into a company with a proven track record of success and a bright future ahead. And with Amazon, you're investing in a company that's changing the world. From e-commerce to cloud computing, from entertainment to smart home technology, Amazon's impact is undeniable, and its potential is limitless. There you have it, 3 tech stocks that are absolutely crushing it and are poised for even greater things in the future. So which of these stocks offers the best opportunity right now? Let us know your thoughts in the comments below. Remember, investing is a long game, and these companies represent incredible opportunities to build wealth over time. If you want to take your investing to the next level, Forecaster is the ultimate tool I trust to find incredible stocks like these. Don't wait, try it for free today. Just click the link in the description with my code, Galore10, for an exclusive 10% discount. Now, I want to hear from you. Which of these 3 tech giants are you most bullish on? Are you adding any of them to your portfolio? Let me know in the comments below. And as always, if you enjoyed this video, make sure to hit that like button, share it with your friends, and subscribe to the channel for more investing insights. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Don't forget to like the video, leave your thoughts in the comments, and subscribe for more in-depth market analysis. See you in the next one.